हेलो बच्चों। तो कैसे हैं आप लोग। तो आज का हमारा टॉपिक द कंप्लीट गाइड टू कैलकुलेटिंग सेल्स फोरकास्ट विद एग्जांपल्स के बारे में है। तो वीडियो स्टार्ट करते हैं। द कंप्लीट गाइड टू कैलकुलेटिंग सेल्स फोरकास्ट विद एग्जांपल्स। योर सेल्स टीम्स might be closing deals and hitting targets, but without a data-driven roadmap, efforts can become inconsistent and hard to measure. One quarter they might excel, the next they could miss target and waste valuable resources. That where sales forecasting can help keep the momentum steady. And accurate sales forecast act as a crystal ball for your business, predicting futures sales revenue. It helps set realistic target, allocates resources effectively, and just strategies to meet changing the market conditions. Ready to take guesswork out of your sales process. This blog post explores various sales forecasting methods and highlights examples that keep your teams on track for success. What is a sales forecast? A sales forecast predicts future sales revenue for a specific period. This is based on factors like current sales data to identify patterns and seasonality, market trends to highlight shift in consumers' behavior, and industry developments. Historical performance to reveals that has worked in the past, helping to establish reliable benchmarks. This implement elements gives businesses substantial data to eliminate sales for existing products, new customers acquisitions and membership sign-ups, plus they can place investment in new product and services and allocate resources effectively for growth. There are two types of sales forecast. Long-term forecast extend beyond 1 year and rely on broader market analysis and historical data. They help plan for growth, set strategies, sales goals, and allocates resources for new product and market expansions. Short-term forecasts predict future sales for up to 1 year based on recent data and current market conditions. They guide decisions on inventory, staffing, and marketing. Why do you need a sales forecast? Here's why sales forecast is your key. Your security steady growth. Set realistic target and quantities management can set achievable target based on expected sales. This motivates teams with clear, realistic goals and keeps the sales team focused and productive without added pressures. Provide insight for resource allocation and budgeting. An accurate forecast helps businesses allocate resources like staffing, inventory, and marketing whereby drive the best results. This facilitates efficient spending and maximizing returns by aligning budgets with projects revenue. Aids in managing cash flows and blaming for growth. A well-structured sales forecast provides insight into expected cash inflows. This enables businesses to plan for expense, manage working capitals, and prepare for potential growth opportunities without financial strains. How to calculate a sales forecast? Sales leaders typically creates a sales forecast to set target for their reps, but it's also a powerful tool for executive to plan budgets, marketing teams to set acquisition goals, entrepreneurs to attack investors, small business owners to make key operational decisions. Here's how to calculate a sales forecast and gain clarity on your financial operational capacities for the future. Sales forecast formula. While there is not a one size fits all formula for sales forecasting, its simplest formula can be your starting points. Let's say you sell a software subscriptions that cost $500 per year and expects to sell 200 subscriptions in the upcoming quarter. Calculate the sales forecast for the quarter. You can use the formula. This method is useful for predicting total revenue when you have a stable pricing model and can estimate the number of units sold. You can also use the following formulas. This approach gives the more comprehensive views by considering for confirmed and potential sales for the year. Common methods for sales forecasting with examples. Businesses differs in size, industry, and market condition, which is why no single sales forecasting method works for everyone. Selecting the right method depends on factors such as business size and industry, available data and tools, complexity of the sales cycles. With that in mind, let's explore some of the most common sales forecasting methods. Historical sales data. Historical sales data forecasting uses past sales to predict future performance. Assuming future sales follow summary trends, it's effective for businesses with a stable market and product but can be less reliable for new or rapidly changing industries. Here's how it works. Analyze sales records over a specific period, i.e. past months or years. Identify trends, seasonality, and patterns. Use this data for future sales projections assuming market conditions remains consistent. For example, here the 1 year historical sales data for bookshops. By analyzing this, the store identifies that November and December see a sales spike, with December peaking due to gift shopping. March and June are a strong month given by books fairs or graduations. February, May, and September show steady growth from book releases, summer trends, and back to school offers. July sees a slight decline before sales picked up in August. Based on this, insights to bookshops can increase in inventory of popular gifts items in December's in tailors' marketing strategies to capitalize on summary reading in May. Pipeline based forecasting. The release forecasting process uses data from a company sales pipeline is predict futures. Companies' revenues focuses on deals they stage, the cycles, closings, probability, and other key metrics like deal value and timeline. This approach provides real-time revenue insight and help adjust forecast as deal progress. Here's how it typically works. Gather the data. Data all these pipelines from data to clear noses close aligns with probabilities for closing to each deal based on its stage. IG lead proposal negotiation close. Calculate each deal's weight values using its probability percentage. Add the weight values to create a revenue forecast. Let's see a sales forecast example of a software company using the pipeline forecasting methods. Adding up all the weights values provides a total forecast revenue. Of this forecast allows the sales teams to allocate resources, refine strategies, and align sales capacity with opportunities to meet targets. Market research. Market research provides direct insights into customers' preferences, competition, and market demands. It's ideal for businesses launching new product or entering new markets, navigating competitive or seasonal demand, and analyzing economic, social, or environmental impact. on sales. For example, a company launching a new organic coffee line discovers a growing trend towards organic and sustainable products, especially among health conscious millennials. Key competitors like Starbucks and local brands are already in the organic market but lack sustainable packaging, increase customer spending on premium ethically sourced product. Based on these insights, here are the estimates of potential sales and revenue considering the price of until is $15. Take a sales forecasting of the level with ClickUps. Not only that, the platform's intuitive dashboards provide real-time visibility into sales performance. This empowers teams to make data-driven decisions and just sales marketing strategies on the fly. Sign up for ClickUps today and get off the competition with accurate sales forecast. Okay friends, see you on next video. Take care. Bye.